one path is a deflationary squeeze where the US dollar surges and everything cracks under the pressure. The other is a familiar escape route, which is a massive monetization, rate suppression, and currency debasement. And both paths are ugly in their own way. Both are inevitable at some point, and the only question when it comes is how will crypto fit into this storm, right? So we are definitely living through a everything bubble scenario where stocks and real estate and private credit and crypto all climbed at the back of a 40-year decline in interest rates and a global dollar machine that made leverage cheap, right? So now the system is creaking under its own weight. US debt has blown past 130% of our GDP, and treasury issuance is running at $1 trillion per quarter. Foreign buyers have stepped back. Central banks are quietly buying gold and liquidity plumbing. That is TGA balances, RRP facilities, and Fed reserves almost tapped out, right? This isn't late cycle. It's definitely the end of a cycle. And the first scenario could be a dollar super spike where credit will tighten globally. Dollars become scarce because of, let's say, most of the world's trade is, and the loans are also still dollar denominated, right? So a scramble for liquidity could push the dollar index towards 120 or higher. In that world, treasury yields spike first, then the collapse happens as investors rush for safety. Emerging markets would sell to cover debt, commodities fall, and crypto, far from being a safe haven in that moment, would suffer liquidation waves as leverage is flushed out. Bitcoin would trade like a high beta NASDAQ proxy, punished before it actually then rebounds, right? So the other scenario is one we've seen before, where central banks blink. The US cannot sustain these rates without breaking something systemic, right?